Good afternoon, students. Welcome back to this discussion on audit. So today we plan to continue with our discussion on the reporting part. So in the previous session, we started with this audit report, wherein we looked at one of the audit reports. Okay, we tried to understood what are the elements in the audit report and some of those objectives of the audit as to how they are taken care of through this audit report, which is issued by the audit. Okay, and in that case, the audit report that we looked at was all about clean opinion, you can say, or unmodified opinion. So whenever this report goes out clean, so it means that the financial statements do not contain any material misstatement. Yeah, so that's the understanding that we have. But there could be certain scenarios wherein the material misstatements could be there. So how is this reporting going to change then? So that is what we are planning to cover today. But before that, let's do a quick recap of some of the elements which are there in the audit report and how some of those things are required to be taken care of. Okay, so just give me a minute. So what we will do is, all right, so I think we looked at one example in the previous session, and some of those examples were largely about the unmodified opinion. Yeah, so now what we will do is we will just try to understand some of the requirements related to the clean report or the unmodified report and what all elements are included there. Yeah, so broadly. So now, as regards the audit report, we discussed that it's a fixed structure, or you can say there's a format of the audit report. So anybody can't just really go and change the format. And in that format, there were various elements that we discussed. As around those elements, we discussed that there's a particular order of those elements to be included in the auditor's report. So you can't just move that up or down in terms of the formatting. Further, in terms of various elements, I think the most important one with which the audit report gets started happens to be the opinion. Yeah, so opinion is the most important thing because everything comes down to the opinion, and that is where the important part lies. There was another aspect of the audit report that we discussed briefly, and that was about the legal requirements. So, in case of an audit report, we discussed that there are various legal requirements which an auditor may be required to look into. Again, that will depend on the different types of legal requirements which may be applicable to that particular entity. But now in this scenario, because those legal requirements are mandatory, because that's why these are required to be looked into, and the moment you say these are the legal requirements, automatically one will understand that they are mandatory. So it's not something which is going to be an option for the entity. So that is where a couple of requirements that we discussed include CARO and IFC. Now, CARO, you can say, is a checklist wherein certain pointers, certain areas are required to be looked at by the auditor and also commented upon. So, one may always think that if the auditor is looking at a lot of things, then why some of those points are specified? Because that's the requirement of that particular legal clause. Okay, so those specific points are required to be commented upon. But does it make that a separate opinion? The answer is no. So opinion will always remain one, and the opinion will always be on the entire set of financial statements. Okay, so you'll not get to see opinion coming on maybe a particular specific area or maybe a particular line item in the financial statements. So that's not how it will work. So that's how opinion is not required to be looked at. Okay. Further, there is another report that we discussed, that is report on internal financial controls. Now, this is the report on which a separate opinion is given. But that is again in the context of financial statements of the company. Okay, so in this case, auditor is commenting upon the control as to whether those controls are operating effectively or not, and what controls are focused upon. So all of these controls that are discussed happen to be the financial controls, something which will have a bearing on the financial statements of the company, and that's why this is also called as ICFR, internal controls over financial reporting. Okay, so we can say these are the couple of requirements, very specific, which we discussed, and over which we also discussed that because it includes a lot of points, so that's why it's not appropriate to include all of those points in the main report itself. That's why where do you find them? That's why you find them as an annexure to.
संगीत को अच्छा फर्स्ट टाइम में दोबारा ज्वाइन कर
I sorry, it got disconnected, I think. Okay, so we were discussing about another very important aspect, and that is about the other information which goes out in the annual report or along with the financial statement. So every time you have some other information which will have some financial numbers. So it can always bring in some sort of inconsistency. If at all the numbers are not really linked, if at all the numbers have some sort of disintegration. Okay, so that is again one of the parts which is required to be focused upon, which is required to be looked into. Okay, and that's where another very important point happens to be the consistency check. Okay, but when you say the consistency check, so does it mean a specific audit of those other informations? Answer is no. So therein the audit objective is all about ensuring that the information that is going along with the financial statement should be in line with the financial statements. And if at all there is some inconsistency, to make sure that financial statements are coming out with the correct set of information. Okay. So this is briefly about some of the things that we discussed in respect of audit report. Now, what we are going to do is we will now be touching upon some of the requirements of the audit report wherein the misstatements are found. Okay, so that's why what we will do is we will just quickly have a discussion around the misstatements and the kind of misstatements, though we have already talked about it, and eventually how these misstatements are required to be taken care of. Now, whenever there is a misstatement, and when we talk about misstatement, those misstatements could be material or immaterial. Okay, so whenever there is a misstatement, if those are material, then what will happen? The report will not be clean. So the opinion which will go out will be modified. Okay, yeah. Now it doesn't matter once again whether it's a single misstatement or it's an accumulation of misstatements. Remember the discussion that we had as around the misstatements? Yeah. So now important part is to understand that the financial statements contain material misstatements individually or in aggregate. Yeah. However, if the financial statements contain misstatements, but those are not material, then what do? You do unmodified opinion. Now, what is unmodified? The one that we looked at in the previous session. Okay, so whenever the opinion is unmodified, in such a case, this wording unmodified is not used. Yeah. So if the report is silent in terms of this opinion, if the report only says opinion or the basis for opinion, so what would it imply? So it would always imply that the opinion is unmodified. So that means whenever the opinion is modified or something is required to be included therein, a specific wording will always get attached to that. So we'll understand what is that specific wording and how do you get onto those specific wordings, what are required to be looked into in those specific wordings. Okay, so now let's talk about this particular situation. Okay, so when the report is required to be modified. Now, in this case, if you remember, we discussed that there is another auditing standard which one needs to look into. Because as regards the audit report, we do not have only one auditing standard. You can say there are various auditing standards. Now, which auditing standard is that? SA 705. Now, this standard talks about modifications. What is it that the auditor needs to do when there is a modification, or when the auditor concludes that the modification is required to be included? Number one, if the modification is considered, or you can say it's something which the auditor is planning, what could be the reasons around it? So all of these answers you will get to know from SA 705. Yeah. Now, talking about this modified opinion, or you can say modification in the auditor's report. Modification could again be bifurcated into three categories. Okay, so you may be thinking, sir, are these all modifications? Yes. So whenever the report is modified, so you will not call it as modified report. You will call it as, or you can say you will call it by the type of modification which will be included there. Means you need to be specific. Because to say that the report is modified or if the opinion is modified, it's a generic term. But what is specific? Specific is about the types of modification. So we can say there are three types of modified opinion. What are those? Qualified opinion, adverse opinion, and third is disclaimer of opinion. So we have these three types. And for these three types of opinions, there are three different scenarios that we need to look into. Yes or no? Because if the auditor says that there is a material mistake, so does it mean that the auditor can just go and choose any of these opinions? The answer is no. The answer is no. It's not a choice. Okay, so therein the auditor will have to go look at, find out as to which of these modifications need to be included in the auditor's report. And what is going to be the repercussion of that? How is that going to have an impact on the financial statements? What messaging is being passed on when he is discussing about all of these modifications in the auditor's report? Okay. Now, if you look at this table, or you can say this sort of summarized version of the standard, through this table you can just understand each and every aspect which is included in this auditing standard. Yeah, so it's a very nice summary of different types of situations which are there, and the types of modifications which are required to be included. Okay, so now for the modifications to be included, and before we really get on to the modifications, we can say an auditor may come across two types of situations. Okay, an auditor may come across two types of situations. So let's try to understand as to what are these two types of situations. Why? Because depending on the types of situations that the auditor will face, what will happen? What will happen? Depending on the types of situations the auditor will face, his modification or the type of modification that he plans to pick up may change. Okay, so there are two situations. One, auditor has planned to obtain certain information from the company. Okay, something which you call as sufficient and appropriate audit evidence. Yeah, so auditor has planned to obtain something, and the auditor has got the required information. Means whatever he has asked for, he has obtained. Okay, in fact, let me just go to that file and try to understand this. Okay, so two types of situations could be there. Now, what are these two situations? Auditor has asked for some information. Information asked for. Yeah. And that has been provided by the entity. Okay, so it's a positive situation. If you go look at this situation, one may say it is something which reflects positively on the part of the company. Yes or no? Yeah. Yes or no? Yeah. So let me just try to keep it in information asked for. Okay. So now auditor has asked for some information and that has been provided. Now the first situation is that has been provided. Now in this case, we are not talking about whether this entire information or the part information. No, we are just simply saying that anything which the auditor wanted, whether there was some supporting document, there were some inquiries, okay, any details that he requested for, whatever the management had, yeah, to the comfort of the auditor has been provided. Okay, so that's the first situation. Another situation is auditor has asked for some information, but that has not been provided. Okay, so this could be the second possibility or second situation. Yes or no? Yeah, only two situations are possible. Either the management will provide or not provide? Now you may be thinking that why would the management not provide? See, there could be various reasons for that. Maybe the requested information is not available with the company. Why? Maybe their records are lost. Say there was some fire at one of their locations, so some records are lost. Okay, maybe the information which the auditor has requested is not available with the company. The way auditor wants is not available, and auditor doesn't have any alternate course of action. Yeah, again a possibility. Or maybe management doesn't want to provide. Yeah, this third situation is going to be rare, but at times it may be possible. Yeah, management may not want to share some information. Yeah, and that's the reason why that particular information has not been provided to the auditor. Okay, so we may have two types of situations. Now let's talk about this first situation. See, this first situation is relatively easier for the auditor to manage. I'm saying relatively easier. Why? Because data is available, information is available, everything for the assessment of the auditor is available. Okay, and now on the basis of the information which the auditor has received, he believes, or he has found, he has some observations around the material misstatement. Yes or no? Yeah. So in this case, auditor has found material misstatements. Means he has found some errors, and those errors are material. Now tell me, in this case, in the first situation, when the required information is available with the auditor, and the auditor has also concluded, okay, so all of his observations are like he has concluded. Okay, so there's no doubt as around any of these observations. So he has concluded. So what's the conclusion of the auditor? There's a material misstatement. Okay, so his observation is also finalized. There is a material misstatement. In this case, do you think there will be any challenge on the part of the auditor to quantify the material misstatements, to get into the analysis of the material misstatements? Do you think there will be any sort of ambiguity in this first situation? Will that be possible? Tell me, what do you think? In the first situation, what do you think? Over to you quickly. In the first situation, do you think auditor will not be able to quantify the misstatements? Auditor may not be able to assess the material misstatements. Do you think this type of situation is going to arise? Tell me. Shreya says no. That should not happen. Why? Because everything he wanted, he has looked at. He has got the data. Okay. And any additional thing which he may require for his conclusions, for his analysis, he is obtaining. He can ask for that information and he'll get it. Okay. So the required information is not the challenge. Required information is available to him. Correct? Yeah. So now in this case, auditor will get into the impact analysis. Okay, so one may say that he will have the impact analysis on an actual basis. Correct? Now, let's talk about this second situation. Now, this second situation is slightly difficult. Let's suppose during the year for a particular area, auditor is asking for some information. Okay, auditor is asking for some information. And what is that? Auditor is asking for some documents, certain invoices, certain details, okay, some workings from the management. Yeah, some of those details have been provided by the company. Some of those details have not been provided. They are not available, or just to conclude, some of those details are not provided by the company. Now, in this case, if that information is not available with the auditor, okay, if let's suppose he has not been able to avail that information. Now, due to the lack of the information, do you think auditor will be able to get on to the conclusions? The answer is yes, because he will have to conclude on the basis of whatever he has received. Okay, if something is not received, he will have to conclude that this part of the information, or this is the thing which I have not been able to receive, okay, or maybe I have not received, because of which I may not be able to comment upon a particular area. Yes or no? Some conclusion he'll have to draw, right? Some conclusion he'll have to draw. So in this case, the conclusions that he draw, do you think those areas may have some material misstatement? The answer is again yes. There's a possibility. There's a possibility. Yes or no? Yeah. But in this case, please remember that we are using the term there is a possibility. Can the auditor say with 100% accuracy that such type of error will be there? No. He will always be looking at the possible impact. Yes or no? So in this case, once again, auditor may say that there is a material misstatement. Yeah. For which he will say there is a possibility. Why? Because till the time the information is not available to him, till the time he doesn't get into the assessment, till the time he doesn't get into the data, how can he confirm, how can he say with surety that yes, this material misstatement will actually be existing? So he'll always be talking about the possible scenario. Yes or no? Yeah. So can you now understand the difference between these two situations as to how the conclusion of auditor will be drawn? Yes. Yeah. So how the conclusion of the auditor will be drawn? That is going to change. Why? Because the underlying which is available to the auditor is different in both the scenarios. In one case, auditor has got the required information. He has got the complete details. In the second situation, auditor doesn't trying to do some sort of impact analysis. Yeah, he's just trying to do some sort of impact analysis. Yeah, so on that basis, he need to just conclude on this. Clear? Yeah, everyone clear? Any questions so far? Any doubts so far? No? All right, great. Shreya is clear. I'm just assuming everyone is clear on this. Okay, now let's go back to that chart. Okay, so there was a chart we were looking at, there was a table we were looking at. Let's go back to that. Now what we will do is we'll just look at one more aspect, and that is about material misstatement, as to how this will be reported upon by the auditor. Okay, so there were two situations that we have just discussed, right? Two situations that we have just discussed. So let's try to look at these two situations. Okay. First situation is wherein the auditor has obtained the required information. Auditor has obtained required information. Okay, so this is the first situation. Yeah. So the first situation is wherein the auditor is saying that required information has been obtained by me and there is a material misstatement. Now, what's the conclusion? Required information is received and there is a material misstatement. What is the second situation? Second situation is auditor says inability to obtain required information. Means he has not been able to obtain the required information, and that's why what are the wordings he will use? He will say that's why there is a possible effect on the financial statements. Now, in what context this term of possible effect is used? That is in the context of second situation. Okay, so in this second situation, auditor will be talking about the possible effects. In this first situation, auditor will be talking about effects and not the possible effects. Yeah. So can you now understand the context as to what is it that we are trying to discuss? So we have not looked at the type of modification as yet. We have just looked at the situations which are possible and how are those situations leading to some outcome on the part of the auditor. And once again, we are not looking at the outcome in respect of the type of modification. That is something we are still to look at. Okay, so the first situation is something wherein the auditor will get into the actual effect. Second situation is wherein the auditor will not get into the actual effect. He will be looking at the possible effects. Always. Okay. Now what we will do is now we will stick to first situation. Okay, so now we are not going to talk about second situation. So we are only talking about this first situation. Okay, so this is the first one that we are going to discuss now, right? Okay, now in this first situation, once again, there are two scenarios which are possible in the first situation. Auditor has auditor has requested for the information. He has obtained the required information. Okay, he has got to the conclusion that there is a material misstatement in the financial statements, not a possible one. He is clear that there is a material misstatement in the financial statements. Now, what are the two scenarios? Now, the two scenarios are one, the misstatement is material but not pervasive. Okay, let me just call it as A or B. B, wherein the misstatement is material as well as pervasive. Okay, so now you may be thinking that what is the meaning of this not pervasive, pervasive? So how do you define this? Anyone, any thoughts that you may have around this pervasive? Anyone who understands about this pervasive? If you have read it somewhere, if you know about this by chance, any thoughts that you may have on this pervasive? Quickly, over to you. Shreya says something which is affecting the entire thing. Now, for our purposes, what is going to be that entire thing? Priyanshi says pervasive should mean which is applied or present everywhere. Shreya says for us, the entire thing will comprise of the financial statements. Very good. So now, let's try to understand this. Okay, so situation 1 and 2 we have already talked about. We have already looked at as to how this is going to have an impact. Now, in relation to situation 1, in relation to situation 1, when the or let me say that the misstatement is material. Okay, so the misstatement is material. So what's the conclusion? So there is a misstatement. Yeah, so there is a misstatement, and that misstatement is material. That misstatement is material. Okay, so now, sorry, again, there's some disconnectivity. Yeah, so now, in this case, first situation is misstatement is material, but not pervasive. And the second situation is it's material and pervasive. Now, let's try to understand the meaning of pervasive. See, pervasive means something which flows, which applies to the entire set of financial statements. Or you can say something which has the impact that even though it applies to only few items in the financial statements, but its impact is huge. Its impact is such that the entire set of financial statements are getting impacted due to this. Okay, yeah. So that's the understanding that we have in relation to pervasive. So let's try to understand this with the help of one example. Yeah, so let me just pick up one example. So let's suppose during the year, company has got some trade receivables. Say there is a financial year 24-25. Okay, if you look at the financial statements of the company, its total assets will be approximately say rupees 500 crore. So I'm talking about the total assets. Okay, wherein the trade receivables are rupees 10 crore. Okay, trade receivables are rupees 10 crore. If you look at the profits for the year, let's suppose are 25 crore. Yeah. So during the year, company has a profit of 25 crore. Now, in this case, let's suppose materiality is determined by the audit team and they are working at a materiality of, let's suppose, 1.2 crore. Okay, so that's the materiality. Yeah. So now, during the year, what has happened? When the auditor reviewed the trade receivables, so they have performed audit of the trade receivables. So auditors are of the view that on trade receivables, a provision should have been created for rupees 2 crores. Okay, but this has not been created by the company. So auditors believe that an amount of rupees 2 crore should be provided in respect of trade receivables. So that's the view, that's the assessment conclusion. Okay, management is saying 0. Yeah, so you can say management provision is what? Nil. In this case, what is it that the auditor have done? So they have gone through the required documents, they have gone through uh, the communications which the management had with some of the trade receivables, which auditors believe are doubtful. But the management is of the view that they are not doubtful and they will be able to collect the money, and that's the assessment, and that's why they believe that no provision should be created. But management doesn't have anything to substantiate. Okay, so even though management is making this comment, but they do not have anything to substantiate this point, to substantiate as to why no provision should be created. Okay, the auditors are not convinced. Yeah, so they are not convinced, and that's why what do they want? That's why they would want to create a provision. So that's why what has happened, auditors have been discussing with the management that you go provide this. Management is not ready. Yeah, so there has been first level of discussion with the accounts team, then there is a discussion with the CFO. Okay, all of those discussions have taken place, which is required to be done. But the management is not convinced. At the same time, so auditors are also not convinced. So they have got different views now. So in this situation, what should the auditor do? Tell me. In this situation, what should the auditor do? What will be the conclusion of the auditor in this situation? If let's suppose you were the auditor, so how would you conclude this? What is going to be your conclusion here? Tell me quickly. If let's suppose you happen to be the auditor of this company, so what is going to be your conclusion in this scenario? Quickly, over to you. Yes. Prem says it will affect the profit of the company, and this will also have an effect on the balance sheet item, that is trade receivables. Very good. In this case, let's try to analyze the numbers which are important. Okay. Now, as an auditor, there is an error. Correct? As an auditor, there is an error. What is the amount of error? Can you tell me? What is the amount of error? As an auditor, there's an error in the financial statements. That's the conclusion he'll draw. So can you tell me what's the amount of error? Great. Prem says 2 crore. So this is the amount of error. Now, is it exceeding the materiality threshold? Answer is yes. If you compare this to materiality, it is clearly exceeding the materiality threshold. Yes or no? Yeah. So materiality threshold is what? 1.2 crore. And the error is what? 2 crore. So definitely it's a material misstatement. Yes or no? Definitely it's a material misstatement. But in this case, just because there is an error in two line items, broadly we can say there are two line items which are going to get impacted in the financial statements. What are those? One, trade receivables. Second, profits. Other than that, will it be appropriate to say that because of this error of 2 crore, entire set of financial statement is incorrect? Do you think it will be appropriate to make such conclusion? Tell me, do you think as an auditor you will go by that assessment? Prem says no. I think Shreya has the same point. So such type of errors, what do you call them? Material. So that's why such type of material misstatements which do not flow to the entire set of financial statements, or you can say which only impact certain line items, certain items of the financial statements, but which are not impacting the financial statements as a whole. What do you call them? I think Almaz, Prem, they have the same point. Material but not pervasive. Okay, material but not pervasive. So under which category you will go? Material but not pervasive. Okay, so if there is a misstatement which is material but not pervasive, then what type of opinion should the auditor provide? In such a case, auditor will provide qualified opinion. Okay, in this case, the opinion which the auditor will provide will be qualified opinion. Yeah. In this case, the opinion which the auditor will be providing will be qualified. Yeah. So let's look at one example to discuss this. Just give me a minute. Let me just go to this example through which we'll try to get some more clarity on this. Yeah, so let's look at this example. Super Duper Limited is a company engaged in the manufacturing of office furniture. So that's the nature of the business of this company. Messrs. Young Gold and Associates are the statutory auditors of the company for financial year 21-22. During the year under audit, engagement partner CA Young noticed that company has not bifurcated its loans into long-term and short-term. So there's an error. Yeah, so this is what the partner has observed. And what type of error is this? Classification issue. It appears that entire amount of loan has been shown as single line data. Maybe entire amount has been shown under long term, entire amount under short term. We are not sure as to what is it that they have done. Okay, but this bifurcation which is required to be done for current and non-current, that has not been done. Okay, now in this case, CA Young believes that such misstatement is not pervasive, okay, but of course it is material. So why material? Maybe it is exceeding their materiality threshold. Yeah, so we don't know as to how they have concluded about materiality, why they are calling it as material. So we'll have to go by what the question says. So question says it's a material misstatement, but looking at this type of error, CA Young, he is thinking that it's not pervasive. In this case, you are required to comment as to what type of opinion should be given by the audit partner. Over to you. Over to you, quickly. Please don't look at the answer. Yes. What should be the type of opinion that the auditor should provide? Quickly. What should be the type of opinion that the auditor should provide in this case? Great. So I can see this response from Prem. He's saying qualified opinion because the misstatement is not pervasive. Shreya says it's not pervasive but material, so therefore it has to be qualified. Almaz is also saying qualified opinion. Very good. So I think it's quite clear. Yeah, that is something that we just looked at. Messrs. Young, Old, and Associates in the given case should give a qualified opinion. Why? Because the effect of misstatement on the account of non-bifurcation of loans into current and non-current is material but not pervasive. And whenever you have this situation of material but not pervasive, so what do? You give qualified opinion. Okay, clear? So let's look at another example. I think we've got one more example. Just a minute. Yes, so let's look at this one. Okay, yeah. So let's look at this example. And you need to answer this. Huh? Okay. Now, in this case, this is a company Zebra Limited, for which Messrs. Daisy and Associates are their statutory auditors. And we are talking about financial year 21-22. And CA Daisy happens to be the engagement partner. She wants to verify the cash in hand as at 31st March 2022. Means for the year end, she wants to verify the cash in hand. Yeah, good. Okay, now the cash balance of the company as on 31st March, when she plans to perform this procedure, is rupees 1 lakh. If you look at the turnover of the company for this particular financial year, it is rupees 6 crore. So that's the turnover of the company. Management of the company informs CA Daisy that such cash verification, okay, so the cash verification she plans to do is not possible as the cashier is on leave for his marriage and no other employee of the company is available as all are busy in the year ending activities. Okay, so that's the situation that we have. In this case, in this case, you are required to comment as to how would you deal with this. Over to you. How would you deal with this? If let's suppose you happen to be the auditor, how would you deal with this situation? Yes, quickly. How would you deal with this situation? Over to you, quickly. in this case, how would you deal with this situation? So, what is going to be your assessment? Given the situation that you have, how would you deal with this situation? Over to you, quickly. Yes? Anyone? Any thoughts? Shreya says auditor is unable to verify the cash, which may have possible material misstatement. Very good. See, if you remember, there were two situations that we discussed. Yes or no? Yes or no? There were two situations that we discussed. First situation was wherein the auditor gets the required information. So he has been asking for something, he is getting that information. What was the second situation? Second situation was the one wherein the auditor is asking for the information, but he is not getting the required information. In such a case, when the auditor is not getting the required information, what is going to be the impact? Auditor doesn't know. So that's why what would auditor do? Auditor will look at the possible impact. Yes or no? Auditor will look at the possible impact in such a scenario. Correct? Yeah. So therefore, let's go back to that table now. Now, if the auditor is unable to obtain sufficient appropriate audit evidence, so we are talking about this situation, and auditor believes that the possible impact, okay, so we are talking about possible impact, is material but not pervasive. We are still on this chart and we are still on this conclusion, is material but not pervasive. So every time when the misstatement is material but not pervasive, then this could be because of two situations. One, the auditor has obtained the information. Second, auditor has not obtained the information. In both the cases, what type of opinion will be provided? Qualified. See, whether you go receive the information and find out there is a material misstatement and that misstatement is not pervasive. So as an auditor, what do? You qualify. Let's suppose you go there, you don't get the information and your conclusion is what? See, there's a possibility, okay? There's a possible effect. And for that possible effect, you're saying, okay, it's going to be material but not pervasive. So there again, what is going to be the opinion which the auditor will provide? Qualified opinion. So in both the cases, opinion will be qualified. Why? Because the misstatement is not pervasive. So whenever the misstatement is not pervasive but material, in both the cases, what will you do? You will qualify the audit report. You will qualify the audit report. So let's come back to this example. Now, in the light of this understanding that we have just obtained, in the given situation, auditor wants to verify cash in hand. Auditor wants to verify cash in hand. Now, cash in hand is an important item in the financial statements. Okay, so there's no doubt it's an important item in the financial statements. Whenever you go look at the cash in hand, so what is it that you will do? What information you will ask for? You will want to physically verify that. So that is going to be the information, that is going to be your audit procedure. Is the auditor able to perform such audit procedure? Tell me, is the auditor able to perform such audit procedure in this scenario? Shreya says no. Yeah. So that means required information is not available, or sufficient appropriate audit evidence to verify cash is not made available to the auditor. So therefore you get into the second situation. So now the auditor will have to do the impact analysis. So the impact analysis which the auditor will do, now in this case, we'll have to understand as to what is going to be the possible impact. Possible impact is going to be significant. Why? Because cash in hand is considered to be an important item. Yeah, cash in hand is considered to be an important item as far as financial statements are concerned. Okay, and therefore auditor may say that the impact is significant or the possible impact is significant. Okay, auditor may say that possible impact is significant, material. But can that be extended to be called as pervasive? Can we say that because the cash in hand has not been verified, so that's why entire set of financial statements could be a problem? What do you think? Will it be appropriate to say that? Tell me, will it be appropriate to say that the entire set of financial statements is a problem? Shreya says no. Now Prem has a question. Sir, in this situation, how can the auditor decide that cash is materially misstated? See, that is going to be the assessment. That is going to be his judgment. That due to the lack of information or in the absence of audit procedure, how will he conclude on this particular area? And in relation to any financial statements of any type of entity, please remember cash and bank happens to be a very, very important area. Okay, it's considered to be a very important area. Yeah. So in the given scenario, we do not know whether it will lead to a material misstatement or not. We don't know. We can't say. Okay. One will have to analyze. Auditor will have to analyze. The only thing is that if he believes that it could lead to a material misstatement, but it will not be pervasive. In such a case, he will give a qualified opinion. Yeah, so that's why we are not saying that he will be giving the qualified opinion. He may be considering that, or that could be one of the possible outcome in this scenario. Clear? Prem, clear on this now? Yeah. Okay. Clear? All right. So now let's move further. Now what we will try to do is, now we will try to understand about the pervasive. Okay, about this situation which you call as pervasive. Okay, so we looked at one example that was around the material misstatement. Now what we will do is we will try to obtain this understanding of pervasive, and wherein we'll go back to all of those situations. So what is the understanding about this pervasive? This term pervasive in the context of misstatements is used to describe the effect on the financial statements, okay, whether leading to misstatement or the possible effects leading to misstatements, yeah, which are not confined to specific elements, accounts, or items of financial statements. Means they will flow, they will cover entire set of financial statements. Number one. Number two, if let's suppose you say that no, they are confined, they are limited to only some line items of the financial statements, then the proportion of such line items of the financial statements is so significant that effectively it will flow to the entire set of financial statements. And if you talk about the disclosure requirements, if let's suppose a particular disclosure has been missed out, then such a disclosure is very, very important. If you miss out on such disclosure, then the understanding of the stakeholders of the financial statements may change. And that's why their decision making could be impacted. Okay, so that is how we define this pervasiveness. Yeah, but we are going to discuss this in more detail with the help of some examples. Yeah, I think we can take a break now, and after the break, we will continue with our discussion on this. But before that, any questions, any doubts that you may have, let's discuss those questions. Any questions, any doubts? Over to you. Any questions, any doubts? No? All right, so let's take a break now. Divya, let's take a break. Sure. Hi. So let's continue with our discussion. So we talked about this pervasive, right? So now let's try to understand as to how do you define, how do you get into this situation of pervasive. Okay. So now once again for this pervasive, what we will do is we'll pick up some example. So let's suppose there's this company having financial statements. Uh, so this company is ABC Limited. Right. So now, if you look at the total assets of the company, their total assets are say rupees 100 crore. Okay, so that's the size of total assets. Profitability is not much. You can say profits during the year have been not very significant amount, 50 lakhs. Yeah, and in relation to one item in the PPE, so PPE, so you can say companies into this capitalization phase and coming up sort of new. So the PP is approximately 80 crore. So the significant chunk of the balance sheet, what do you have? PPE. So you can say it's a significant component of the balance sheet. Yeah. So this is where the auditor has found a misstatement. Yeah. So this is where the misstatement has been observed in PPE. Okay. So in PPE, misstatement has been found. Now, in this case, if you look at the total balance sheet of the company, so I'm not talking about the financial statements on the balance sheet of the company. There is one single item, PPE, which is materially misstated. That's the assessment of the auditor. Means auditor has done this assessment and he is saying this is materially misstated. Okay. Further, if you look at the overall size, this single component happens to be the significant chunk. So in this case, can we say that all the line item of the financial statements are containing some material misstatement? No, it's not the case. But this single line item is so significant, its proportion is so significant as compared to the total size that if this line item remains materially misstated, then the impact will effectively flow down to the entire set of financial statements. Yes or no? Yes or no? Tell me. Yeah. So this single impact is such that even though it's for one line item, but it flows down to entire set, or you can say this entire set may therefore be considered to be materially stated, right? So therefore, in this case, what will you call this misstatement as? Therefore, in this case, you'll call this as material as well as pervasive. Okay, material and pervasive. Clear? Clear? Now, the moment we say that the misstatement is material and pervasive, then what will happen? Now, once again, we will have to look at both the situations. So we are talking about the first situation. Information has been obtained. So are we looking at the possible impact? No. Information has been obtained. Misstatement is material and that misstatement is also pervasive. So in this case, what type of opinion will the auditor provide? Adverse opinion. Now the auditor will not provide qualified opinion adverse. Why? Because the impact is more severe as compared to qualification. Yes or no? Yeah. So the impact is greater as compared to what was there when you issue the qualified opinion. Clear? Clear on this? Okay, now let's look at one more example. Now, under what situations you can have this adverse opinion? So let's suppose there's a financial statement. Now, in the financial statement, what do you find? In the financial statement, let's suppose there are a lot of line items. PP is there, inventory is there, then you have trade receivables, then you have loans advances. All of them have got errors. All of them have got errors. Yeah. Some have got material errors, some have got smaller errors, but on a totality basis, all of these are material statement. If you go look at the P&L, in case of P&L, there again you find similar sort of problem. So revenue is a problem. COGS, you find there are errors. In case of employee cost, there are errors. Okay, so even if you look at the P&L head, there again you find there are material statements or the misstatements which are leading up to material misstatements. So in this case, what will you think? What will you say? Will you say that these misstatements are only material, or you will say that no, these are not only material but also pervasive? Over to you. What is going to be your conclusion on this? Over to you quickly. What is going to be your conclusion here? Clean. Okay, so I can see one response from Shreya. Shreya says that quite clearly it seems to be the case of material as well as pervasive. I think same is the response from Prem. Yeah, clear? So I'm just hoping that you are now clear on what is pervasive. Hopefully, yeah. Because generally I see a lot of confusion around this area. So I'm just hoping that you are clear on this as to what is material and pervasive. Any questions, any doubts? Because generally this is a point of confusion for many. So that's why it's very, very important if you have any questions. Over to you. Any questions, any doubts if you have? Any questions? No? Sure? All right, so now let's look at another situation. Yeah, so now what we will do is we'll go to that chart once again, because situation number 1 we have analyzed. Situation number 2 we have partly analyzed, but on this situation number 2 there is one more scenario which is possible that is yet to be discussed. Okay, so now on situation number 1 we discussed that if the information is obtained, misstatement is material and pervasive, so where do you go? You go to adverse opinion. But if let's suppose information is not obtained, you are looking at the possible effect. Okay, you are looking at the possible effect, but this possible effect as per your assessment is not only going to be material, this will also be pervasive. So in this case, what will you do? you will go to disclaimer of opinion. Why? Because now you will not be giving the qualified opinion. Now you will go to the more severe one. And what is that? Disclaimer of opinion. Generally, this term disclaimer is attached wherein you don't receive the documents. Yes or no? Generally, this term is attached to a situation wherein you don't receive the documents. But please remember, there's a difference. If you look at these two scenarios, there's a difference. Both these scenarios talk about a situation wherein the information is not received. Yes or no? Both these scenarios. But in the first scenario, when you don't receive the information, when you say possible effect is material but not pervasive, so do you go to disclaimer? Answer is no. So when do you go to disclaimer? When you don't receive the information and the possible effect is something which will not only be material but also pervasive. Okay, clear on this? Everyone clear on all of these situations? Yeah. See, this table is very, very important because if you can understand this, then effectively you have covered this entire auditing standard. But if you have not understood this, then whatever you have covered is of no use. Okay, Prem has a question. Prem is asking, sir, if only 2 or 3 items are materially misstated, then it will not be pervasive. See, every time, please remember, there's no standard answer to all of these questions. To say that only one item is materially misstated will not lead to pervasiveness. We discussed that PPE was only one line item, but that lead to pervasive impact. To say that if there are going to be 2 to 3 items or more than 3 items, so it will always be pervasive. Once again, no. Every time you need to analyze. It's all specific to that, and therefore it's quite subjective, it's quite judgmental. Okay, yeah. So you can't draw any standard answer on the basis of this particular question. That 2 or 3 or 4, that's how you go to this situation A. Or 4, 5, 6, you go to the situation B. Not possible. Okay. Shreya is asking, sir, how can the auditor determine that the possible misstatements can be material and pervasive? See, due to the lack of information. If let's suppose you go to audit financial statements of a company. Okay, Shreya, let's try to understand this situation. And let me just go to the same example. Say the total size of the balance sheet is 100 crore. As an auditor, you are looking to audit PPE, which is approximately 80%. 80 crore is the total number sitting in the financial statements. But on PPE, you are not getting any information. You are not getting any data. So what is going to be your conclusion? Tell me. Tell me. If you don't receive the data, so will you say that it's verified? Will you say it's verified? No. So if it's not verified, you will assume it contains errors. Now you may be thinking, but sir, is it necessary that it will have errors? We don't know. That's why we are saying it's a possible effect. Understood? As an auditor, we can't say it's checked. It's okay. As an auditor, we can't say that we'll assume it to be correct. As an auditor, what do you say? That because the information is not provided, that's why we are just saying that possibly it may have some errors. Okay, so it's a possibility. And that is what you'll also write in your audit report. So we'll look at the audit reports, you'll see the wordings, so you'll get to know as to how the auditor will bring it out in his audit report. as around all of these observations, as around all of these reporting requirements. Okay, clear? Anyone else? Any more questions? Any more questions? Prem is asking, sir, we have seen disclaimer opinion when those charged with governance doesn't provide written representation. Yes, so if you remember some of those situations that we have covered in the previous sessions, therein we talked about some of these reporting requirements. Okay, and every time we were saying that in the subsequent sessions you will get a clarity about it. So I remember we discussed about adverse report, we discussed about qualified report, we discussed about disclaimers. All of these situations we have already discussed. So therefore, what you can do now is, ideally at that point of time when you were discussing about those reporting requirements, you should have created a marking that whenever you will cover this chapter, you will revisit that. Okay, so that now you can get this complete clarity. Okay, because a linkage is there. If by chance you have not done that, no worries. You can again go back to some of those situations, try to revise that once. Wherever you see that some sort of reporting requirement has been mentioned in those topics that we have covered. Okay, so now you can just try to analyze them. That is that something in line with what we have discussed today, and why is that helpful? See, that is going to be one of your examples in a way. Yes or no? Yeah. If you remember, there was one concept that we discussed about going concern. Remember? There was one concept around going concern. Therein we discussed a lot of reporting requirements. And what I can do is I can just also put it down currently. Okay, so let me just try to go to that document also. But in the meantime, can you just help me understand that as around that going concern, what were the situations that we discussed? What were the reporting requirements that we talked about in line with some of these things that we just covered? Because that is going to be, you can say, some of our examples for today's discussions. Quickly, over to you. Anyone? Anyone? Can you just help me understand that as around going concern, some of the situations that we talked about, how are those linked to the reporting requirements that we have discussed today? Or do you have some sort of reporting requirements related to modification in relation to the going concern that we covered? Yes. Over to you quickly. Anyone? Any thoughts that you may have on this? Prem is saying that auditor must ensure that management should assess. No, so we are not doing a revision of going concern. We are just trying to get on to those points wherein the going concern issue may lead to some modified reports. That is going to be the point of our discussion for today. Yeah. Idea is not to revise. Idea is to get on to the specific point that we are discussing now. Quickly, anyone? See, if you would have done the revision, you would be knowing about it. If you have not revised that, then also please try to understand the disconnect. Okay, this is again very, very important for you. Let's try to understand. If let's suppose you don't remember going concern. So when we covered going concern, you didn't know the implications of different types of modifications. In fact, you didn't have the understanding of different type of modifications. Yes or no? Yeah. So that understanding was not available with you. Correct? So that means at that point of time, you would have marked that when you will cover this chapter, you will get clarity. So in a way that knowledge is not complete. Now, when you have come to this particular chapter, the time when your knowledge, which you partly obtained, should have been completed today. At that point of time, you have forgotten that. So what will happen? You will miss out on that part, and that is where you'll get troubled. Yeah, and that is where this linkage needs to be maintained. Okay. Yeah. So what I'll do is, as an example, I'll just open that and we'll just try to use that for the purposes of some of our examples only. I can see some responses coming from Prem. He's saying, sir, if the going concern assumption is inappropriate, then the auditor should add MUGC. Again, no. Okay, so let's try to understand. See, if the going concern assumption is inappropriate, as per auditor, what is the accounting requirement? Can you tell me? What is the accounting requirement? If the going concern assumption, tell me quickly, in such a case, what will be the accounting requirement? Over to you quickly. If we say that going concern assumption is not appropriate, then how should the financial statements be prepared? Quickly, over to you. Tell me. I'm just asking about the accounting requirement. Yes, Shreya says assets and liabilities should be recorded at NRV. Okay, same is the response from Prem. But now what has happened? You are saying all the assets, all the liabilities should be recorded at NRV. But what is it that the management has done? Management is keeping all the assets and liabilities at historical cost. So as per the auditor, there are misstatements in all the items of balance sheets. Yes or no? As per the auditor, there is a misstatement in all the items of balance sheet because PPE may have been recorded at 1 crore, which should have been. Yes or no? So that means not only these errors may be material, they will also become pervasive. They will also become pervasive. Yes or no? They will become pervasive. Why? Because they are flowing to the entire set of financial statements. Correct? In such a situation, what is the auditor required to do? So now, has the auditor obtained the information? Yes. Is the impact material? Yes. Is that pervasive? Yes. So what is going to be the reporting requirement? Adverse opinion. Yes or no? Adverse opinion. So can you now understand? Yeah. And this is what we discussed earlier. So can you now understand this reporting implication? What is going to be this adverse opinion? Yeah. Okay. Very good. Now let's look at another situation. Now going concern assumption is appropriate as per the management as well as the auditor. But material uncertainty exists. Okay. So that's why what does it what does the auditor want? That's why auditor wants that an appropriate disclosure should be given in the financial statements. Yeah. So that's why auditor wants that an appropriate disclosure should be given in the financial statements. Okay. So that's what the auditor wants. An appropriate disclosure should be given. Now, is this disclosure important for the user's understanding of the financial statements? Tell me. Do you think this disclosure is important or fundamental to the user's understanding? The answer is yes. It's a very, very important disclosure. It's not about any other explanation or any other disclosure which you go and put it down in the financial statements. It's something which is very, very important. Why? Because if there is a material uncertainty in the financial statements, then the decision making of the users of the financial statements could get impacted if they get to know about it. And when would they get to know about it? Only when there will be a disclosure or the disclosure will be adequate or appropriate. If the management doesn't disclose or doesn't disclose it appropriately, so this can significantly impact the users. So in such a situation, the disclosure that we have, that is deficient. Yeah. And if the disclosure deficiency is not only material, but also pervasive. Why? Because the entire understanding of financial statements is getting impacted. So what will you do? You will get on to an adverse opinion. But if you believe no, this will not have such a severe impact. Its impact is going to be, say, slightly lower. Then, of course, you will get on to the qualified opinion. But in both the situations, modified opinion will be there. Yes or no? Yeah. Both of these opinions are what? Modified. The only thing is depending on the extent, you will just see whether you want to keep it light in the form of qualification or you want to make it severe in the form of adverse opinion. So can you now understand the implication? And I'm just hoping that you have now got this complete clarity as around this going concern also as to how is that going to get impacted. Okay, and what are the requirements over there that we discussed, which may result in some reporting implications. Yeah, hopefully you are getting this now. Yeah, all right. So now what we will do is we will get on to some more examples. Okay, so let's look at this example. Yeah, so let's look at this example. Messrs. Taj Raj and Associates are the statutory auditors of Polex Limited. Polex Limited is stocks and debtors of the company, constituting about 80% of the total assets of the company, are not realizable. Okay, so that's the assessment of CA Taj. All right. Further, cashier of the company has committed a fraud during the year. Which year is this? 21-22. Means the year for which the audit is going on, there has been a fraud which has been committed by a cashier. So there is a fraud on the company. Both the facts are not reflected in the financial statements. So if you go look at the financial statements, there are few concerns. One, stock, debtors, they should be provided. Second, cash, there's a fraud. So of course, some adjustment around the cash. So maybe a cash embezzlement, whatever has happened, that should be provided. Further, there should also be a disclosure around this fraud, that this is what has happened to the company during the year. CA Taj is of the view that the impact of both the situations on the financial statements is material and pervasive. Okay, so in this case, you are not required to get on to the assessment. So assessment is already done for you. What is the assessment? He is saying the impact is material and pervasive, and thus financial statements represent a distorted view of state of affairs of the company. So can you tell me what does the state of affairs stand for? Tell me, what does the state of affairs stand for? Tell me quickly, what does the state of affairs stand for? Over to you. Quickly. In what context do you use this term state of affairs? Quickly, huh? We discussed about this. So whenever state of affairs will be discussed, so in what context you'll use this term, statement of affairs? Or if you talk about state of affairs of the company, so where do you get to see this from? Over to you quickly. It's the balance sheet. Yeah, it is something which talks about the balance sheet. Or you can say the balance sheet is what will talk about the state of affairs. Okay, so now in this case, what do you think will be the reporting implications? Over to you. In this case, what will be the reporting implications? I think Shreya has already answered this. Shreya is saying it should be an adverse opinion. What about others? I think everybody can answer this. Hopefully you are through with this. Premising adverse opinion because sufficient and appropriate evidence is obtained by the auditor. And on the basis of the evidence obtained, he has observed the misstatements are material as well as pervasive. Very good. And this is how you need to present it in the exam. Okay. So now in this case, what will happen? What will happen? Let me just look at one more response. Omkar says adverse opinion is must as the matter contains material and pervasive both. See, in the given question, please understand that the assessment is not required to be done by you. So that's why this question is so much easier, isn't it? You just need to look at that table and get on to the reporting implication. Because every time if the situation is given to you and you have to decide whether it will be material or not, pervasive or not, that's going to be a challenge because that becomes judgmental. But if the question is already giving you, you just need to get on to the reporting. Yeah, means the type of modification. If the modification is required or not. If the modification is required, whether it will be qualified or adverse or disclaimer. That's it. Because these are the three things that we have. Correct? So the auditor shall express an adverse opinion when the auditor, having obtained sufficient appropriate audit evidence, concludes that misstatements, either individually or in aggregate, are both material and pervasive to the financial statements. So in the given case, CA Taj found that total stock and debtors of the company constituting about 80% of the total assets are not realizable. Now this is the most important part. If you look at the balance sheet, 80% of your balance sheet is what? That's an error. Further, if you look at the cash or the bank, because we are not sure as to what is it that the cashier was handling, at least the cash was being handled. Cash in any case is considered to be a very important item in the financial statements. So if there is a fraud, then the fraud could have a lot of implications on the company's financial statements. Yeah. And further to this, appropriate disclosures are not given. So therefore, it's quite clear. It's material and pervasive. And the moment you say it's material and pervasive, where do you go? Go to adverse opinion. Adverse opinion. Clear? Yeah. Now, let's look at one more example. Okay, so another one. Yes, so let's look at this 11th one. Delightful Limited is a company engaged in the production of smiley balls. Okay, so it's a company engaged in the production of smiley balls. So during financial year 21-22, company transferred its accounts to computerized system from manual system. So you can say earlier there was a system of doing accounting. Now they have moved to an accounting package, that's SAP. Yeah. Since the employees of the company were not well versed with this information system, okay, so it's an ERP. ERP, you can say for the time being, it's an accounting package using which accounting will be done. Some of you, if you don't know, yeah, so it's something which is based on computers. So it's a computerized accounting system. So that's why employees need to be trained on this. So they need to have the training as to how to use the system. But even though you train them, they will make some mistakes because it's a new thing. They are using a new system. So of course they will make mistakes. And that's why, because they were not well versed, so that's why what has happened? There were many errors in the accounting during this period. Transition period is when you are shifting from one package to another package. Okay. As such, statutory auditors of the company were not able to extract correct data and the reports from the system. Such data was not available manually also. Now there is a problem. Employees and management of the company were not supportive in providing the requisite information to the audit team. So let's understand this problem. See, auditor is asking for such data. Manually, it's not there. Why? Because earlier the client was doing things manually. Now they have moved to a package. In the SAP, that required information is not available. Okay, so maybe the required reports are not put in place. The required information, the way the auditor requires, is not available. They have not been able to extract that. Further, management employees, they are also not supportive. They are not helping the auditor anyways. So how do they help? They are themselves helpless. Huh? Maybe. So we are not sure whether it's intentional or intentional. Yeah. So in all of these cases, there's a problem as far as audit is concerned. What is the problem? Can you tell me what type of problem is this? Can you tell me what type of situation the auditor is into? Quickly. So what type of situation do we have? Omkar says information and evidence is not available. So we are looking at the second situation. Data is not available. Yeah. So if the data is not available, so what will happen? Auditor will have to think about the possible effect. Can the auditor get on to the actual impact now? No. Auditor will have to get on to the possible effect. Yes, that's what Omkar says. Omkar says auditor is not sure about the materiality. He should disclaim an opinion as the impact can be both material and pervasive. So that's his view. In this case, if you happen to be the auditor of this company, how will you deal with this? How will you deal with this means what is going to be the reporting implication? Means how will you report? Tell me quickly. Also, if you can tell me what type of reporting implications could be there? What type of reporting implications could be there. Quickly, what are the types of reporting implications you may have here? Over to you quickly. What are the types of reporting implications you may have here? Shreya says disclaimer should be there because errors may exist in the entire set of financial statements. Now, please understand. See, when the information is not available, two types of reporting implications could be there. What are those? Qualified or disclaimer. Adverse is not possible. Okay, so you should not be looking at adverse opinion, correct? Only two possibilities are there. What are those? What are those? Qualified or disclaimer. In the given case, auditor may go with disclaimer. Why? Because as around the data is huge and it's not limited to only one line item. If you look at the fact pattern, what do you find? There are many errors in accounting. So are these limited to any particular area? No. Further, auditor is asking for various reports and data. So are these again limited to any particular area? No. So that means for different areas of the financial statements, you see errors. And for that, auditor is requesting the information that is not available. So it appears that it's not something which is limited to only one area. It's something which flows down to a lot of areas in the financial statements. Okay. So that's why in the given situation, what should the auditor do? In the present case, because the auditor is unable to extract the required documents, yeah, so he should be looking at a disclaimer. Why? Because the impact is considered to be not only material but also pervasive. Okay, clear? Everyone clear on this? Yeah, because the impact is not only material but also pervasive. Okay. All right. So, any questions so far? Any doubts if you have so far? No. Okay. So let's look at one more example. Now, in this case, Messrs. Sun, Moon, and Associates are the statutory auditors. Okay, so they are the statutory auditors of this company, Venus Limited. And the financial year is 21-22. Owing to the pervasive nature of material misstatements in the financial statements, engagement partner decided to give an adverse opinion. Explain the responsibility of this engagement partner with respect to communication with those charged with governance. Over to you. Very good. It's a very good question because if you remember, we discussed about communication with those charged with governance. We have also discussed about a type of modification which CA has, engagement partner auditor has already planned. Yeah, quickly, over to you. So, what should be done in the given scenario? Over to you quickly. Yes. Shreya says disclaimer because errors may exist. I think this is the previous one. No worries. No. So the question is around the responsibility of the auditor. Okay, please try to understand. The question is around responsibility of the auditor with respect to communication with those charged with governance. Means as an engagement partner, what is going to be the responsibility of the engagement partner in terms of communication with the TCWG in the given situation? Yeah, so that's what you need to answer. Clear on the question? Yeah, so it's not about whether the opinion should be adverse or not, it's already given. Impact is material, impact is pervasive, already given. Therefore, adverse opinion is required, that is also given in the question. You don't need to get into that. So, in this case, what will you do? As regards TCWG, that's what you are required to comment upon. Over to you quickly. Yes. What will you do? As an auditor, what will you do? Anyone? No? Alright, so I can see some responses coming up. Very good. Okay, so now Prem says when an auditor finds material misstatements, then he needs to communicate the same to TCWG to rectify that. Very good. Even if the rectification is not done, he needs to do that. Even if the rectification is done, he needs to do that. Shreya says that these implications of material misstatement means the auditor is planning to give adverse opinion. So he'll go tell those board of directors or not, because tomorrow when the auditor will sign the audit report, board of directors may say that why didn't you discuss that with me? Yeah, because this is not something which is a positive thing for the company. Any modification is not considered to be a positive point for the company. Correct? So one is, of course, going to them, meeting them, making them understand as to why this observation is there. Further, if you make them understand as an auditor, you ask them to correct it. If let's suppose TCWG agrees with this, so we'll ask them that I have discussed this with the management, they have not corrected. I want you to get it done in the financial statements. If they agree with this, what will happen? This misstatement will be gone. Why? Because it will be rectified. But if they do not agree with this, then they need to know about it. That if this misstatement continues, then the report will not be with the unmodified opinion. Then the report will be with the modified opinion. Okay, clear? CA Moon, being the statutory auditor, should communicate with the TCWG about the circumstances that led to expected modification. Means his point of view as to what is the misstatement, why it is material, why it's considered pervasive. And if that is the case and it remains not adjusted, means it's not rectified, then the auditor's report will be the modified one and the modification will be in the nature of adverse opinion. Okay. Further, the wordings of such modification means the way it will come out in the audit report. That also needs to be discussed. Generally, auditor will present a draft audit report to them. So that's how this discussion takes place. Okay, a draft version will be shared with them. That will be discussed with them. Okay, clear? Now, I think before we look at some more examples, questions, what we can now do is we'll look at some audit reports. Okay, so we'll look at some audit reports. See, some of the audit reports that we have covered, or you can say the audit report that we covered in the previous session, they were all about, I would say, the clean opinion. Yes or no? But when it comes to the audit report which doesn't have the clean opinion, then the wording which is used is different. So that's why let's try to now understand as to how the wordings of the audit report changes. Okay. All right. So now, so the report that we are looking at right now is the one with qualified opinion. Okay. So in this report, opinion is qualified. So now, whenever the opinion is qualified, so what will happen? The first section, remember, how does the audit report start? Audit report starts with the opinion. But if the opinion is not clean, modified, and what type of modification is that? Qualified. So what is going to be the wording and the header? It will be qualified opinion. Okay, so user may not read this opinion, or you can say without reading the opinion, user will immediately get to know that the report contains qualified opinion. Understood? Yeah. Now, let's read the language. Let's see as to how the qualification will be put down. So the first para will be similar. Similar means the one that we saw in the unmodified audit report. Auditor is saying we have audited the financial statements of the company, which comprise balance sheet, statement of P&L, cash flow, notes, all of these information. Now, first para, if you remember, when we discussed the report with unmodified opinion, same para was specific, talking about what has been audited. Now, let's look at the second para. In the second para, auditor says, in our opinion, and that is when the auditor will say opinion is, that is when the auditor will say true and fair view. And now when the opinion is qualified, how can the auditor use this language, true and fair view? Because entire set of financial statements is not a problem. Remember, in case of a qualified opinion, can we say that entire set of financial statements is misstated? Tell me, can we say that? What do you think? Can we say that? Shreya says no. I think Prem is also saying no. So in this case, what was the problem? Certain line item of the financial statements are misstated. So that's why, what did the auditor use? Auditor is saying except for some line items. He's saying except for the effects of the matters described in the basis for qualified opinion section. So he's saying if you exclude those line items, whether it is trade receivable or say he's talking about borrowings, whatever is that, remaining financial statements are good to go. Understood? Now, when you go look at this basis for qualified opinion section, therein auditor will explain this. He's saying we draw attention to the matters described in Annexure 1. Why? Because the effects of misstatements possible effects of undetected misstatements, all of those are covered there. Now, in this case, it appears that there were a lot of errors. There were a lot of errors. So that's why auditor was required to create an annexure. Generally, it will not happen. And you may be thinking, sir, if there are a lot of errors, so shouldn't it become adverse opinion? Not necessarily, because all of those errors were aggregating to materiality, but they were not moving to the direction of pervasiveness. Okay, so now in this annexure, auditor has explained what are those errors, and because of those errors, what line items are getting impacted. Clear? Clear on this? Yeah. So this is how qualified opinion will be explained. Okay, now let's try to understand about adverse opinion. Let me just go look at one audit report wherein we'll see adverse opinion. In case of adverse opinion, you'll see some change in the language. Obviously, it's adverse opinion, so definitely the header will change. Definitely the header will also change. So now what is going to be the header? Adverse opinion. So that's going to be the header. See, if the opinion is clean, header will be opinion. If the opinion is qualified, header will be qualified opinion. If the opinion is adverse, header will be adverse opinion. And same goes with this basis for opinion. If the opinion is clean, you will say basis for opinion. If the opinion is qualified, you will say basis for qualified opinion. And now because the opinion is adverse, so that's why you will say basis for adverse opinion. Okay, now in this case, let's try to understand as to how the language of the report in the opinion section will change when you move from qualified to adverse opinion. We have already seen that changing from unmodified opinion to modified opinion means qualified. But in this case, we'll also be looking at as to how it changes when it is adverse. Shreya has a query. Shreya is asking, sir, in that report, it was also written inability to obtain sufficient information. Then also it was qualified. Yes, Shreya, because if you go back to our table, remember the table we discussed? In that table, we discussed that whether you receive information or not, in both the cases, if the impact is material but not pervasive, then what will be the opinion? Remember? Yeah, got it? Very good. Okay, so now let's look at the language of the adverse opinion. So now the auditor says, once again, the same wording he is using. We have audited the financial statements of the company, which comprise balance sheet, statement of profit and loss, cash flow, all of these things. If you remember, same para was there in case of clean opinion. Same para was there in case of qualified opinion. Correct? So that means first para doesn't change. That remains same. Why? Because auditor is saying that this is what we have audited. Yes or no? Yeah. Now, let's look at this second para. Now the auditor says, in our opinion, because of the significance of matters discussed in basis for adverse opinion para, financial statements do not give true and fair view. Can you see the change in language? Can you see the change in language? When you read the qualified opinion, auditor was saying that financial statements give true and fair view except for certain line items. So he's using the wording except for. So he's saying exclude these line items, otherwise everything is okay. But now he's saying that entire set of financial statements is a problem. So can you now understand? Because it's more severe. Yes or no? Yeah. So can you now understand that the extent of his reporting, or you can say the negative reporting, that has increased significantly? Now, when the user will read the financial statements, so what will be the impact? User will get uncomfortable. Why? Because he'll say this entire set of financial statement is a problem. Yes or no? Yes or no? Yeah. So can you see how different it is and how uncomfortable the user is going to now become because of this. Now, let's also look at one report wherein the opinion is that of disclaimer. Okay, so now we'll see as to what is going to be the language when disclaimer is given. Okay, and we'll see as to how the language will change. See, in all of these three types of reports, clean, qualified, and adverse, what was the first para? We have audited the financial statements, but now read the para. Now the auditor says we were engaged to audit. Has he used any term anywhere that we have audited? Tell me. Tell me. Can he say this that we have audited? He can't say. Why? Because he can make that statement only when he'll get the required information. If he doesn't get the required information, how can he make the statement that we have audited? Yes or no? Further, if you go to this next para, there again you see a significant change. In the qualified as well as adverse opinion, even though there were problems or significant problems, auditor was giving an opinion. He was saying we provide an opinion. True and fair view except for. Do not provide true and fair view. But now auditor says we do not express an opinion. So can you see the change in language? Can you understand as to why this is happening? Because he doesn't have the information to audit. He has not been able to complete the audit. And if he has not been able to audit, how can he express an opinion? Can he express the opinion? The answer is no, he can't do that. That's not possible on the part of the auditor. Yeah. So can you now see as to how the reporting implication is there in respect of all of these types of modifications? Yeah. Everyone clear? Everyone clear? All right. So any questions, any doubts that you may have, let's discuss that. And then we'll conclude our discussion for today. Okay. But my request for everyone is to make sure that you revise this. Okay, so before we meet next, you revise this. See, all of these things in the audit report in this particular chapter, they are quite interconnected. So that's why it's very, very important you keep revising all of this. All right. Okay, so if you do not have any questions, then we can just close this session. Okay, yeah. Thanks everyone for your time and for this wonderful participation. I think Prem has a request to upload this real life example. So see this presentation, this video is getting uploaded with all of these real life examples. Anyways, so you should just make a note of these points. I think that is going to help you, Prem. All right. So thanks everyone.
Thank you, sir. And students, today we have continued the chapter number 8, audit report. Basically, today we have covered types of opinion the auditor issue in his audit report. So there are various types of the opinion could be modified or unmodified. We have also studied the types of modified opinion. It could be qualified opinion, adverse opinion, or disclaimer of opinion. Sir have also showed you some audit reports, and after qualifying your examination you will also issue audit report. So study this chapter very carefully. This chapter has a very nice weightage. It's 8% to 12%. So do not take this chapter lightly. Okay, revise it from your cover it from your study material and then revise it from Saransh. Do the question practice from case scenario booklet and model test paper book. And if you have any doubt, you can ask in the chat. Your next class is scheduled on 7th of May, that is Wednesday. Okay. If you have any doubt, you can ask. Otherwise, we'll see you in the next session. No doubts. Okay, so thank you, sir. And thank you, students, for your actively participation. See you in the next class. Yes, Divya.